Thanks for joining me this Friday, the 13th of December. I'm Grady market analyst with Bell Direct, and this is the weekly market update. A few key economic data readings, central bank decisions and stimulus talks were the key drivers behind market moves globally this week. Let's dive into what happened on the local and global markets in the second trading week of December. The highly anticipated final US inflation reading for 2024 was released on Wednesday, with the data meeting economists' expectations and paving the way for the Fed to consider cutting interest rates again at the FOMC meeting on December 17 to 18. Core inflation, which strips out volatile inflationary drivers like fuel and food prices, rose 0.3% from October to November and 3.3% on an annual basis. The outlook for lower interest rates boosted the tech-heavy Nasdaq to a record high on Thursday as the high-growth sector feels the greatest benefits from a lower interest rate environment compared to other sectors. At home this week, the RBA maintained Australia's cash rate at 4.35% at the final meeting for 2024, as some key inflationary pressures remain persistent and inflation is yet to remain within the target 2 to 3% consistently in Australia. Our mining companies also felt a boost earlier this week on fresh stimulus talks out of China. Any news and promises out of Chinese officials regarding stimulus packages and boosts to the Chinese economy have led to gains for the local mining sector over the last 12 months. Tuesday was no exception, with Chinese leaders on Monday promising proactive fiscal measures and moderately looser monetary policy for 2025. The timing of the stimulus talks, though, was very interesting, as Chinese inflation data also out on Monday indicated easing inflation in November from 0.3% growth in October to 0.2% rise in November, which signals further sluggish economic recovery in the region post-pandemic. While any stimulus out of China to reignite demand out of global goods and services is welcomed, caution around buying into the hype rally is required. Until the stimulus flows through to material economic growth and demand increases, investors should be cautious about buying into the hype rally. Later in the week, we had the all-important Australian jobs data for November released. The data shows and plays a really significant role in shaping both inflation and rate outlook expectations for the RBA, with a lower unemployment rate signalling strength in the labour market, which leads to more money being spent and inflationary pressures rising, while a higher unemployment rate signals weaker economic conditions. The data that showed that the unemployment rate in Australia fell to 3.9% in November from 4.1% in October, which was well below economists' expectations and adds to the RBA's headache heading into the February rate meeting. Employment in Australia rose by 35,600 in November, which well exceeded the 25,000 markets were expecting, while full-time employment soared to an increase of 52,600 last month, which also well exceeded the expectations of just 10,000 new full-time workers. The data indicates the labour market in Australia remains tight, and the RBA will need to consider this reading and the jobs reading in January before considering any rate cuts in February, among other key inflation drivers. Locally, from Monday to Thursday, the ASX 200 fell 1.08%, breaking the traditional Santa rally of the December month. Material stocks rallied 1.88%, while tech stocks tumbled 5.3% over the 4 trading days. The winning stocks were led by Insignia Financial, adding 10.4%, Vault Minerals rallying 8.6%, and Coronado Global Resources rising 8.4%. And on the losing end, Venture Service Group tanked 22%, while Alcoa and Life360 fell 13.4% and 12.4% respectively. On the broader market index, the All Ords fell 1.18% as Platinum Asset Management fell 36%, while Next Ed Group rose 44%. The most traded stocks by Bell Direct clients this week and throughout the week were CBA, BHP, Pro Medicus, ANZ, West African Resources, Mesoblast, Life360, Mineral Resources and Zipco. And the most traded ETFs by our clients this week were led by iShares S&P 500 AUD ETF, BetaShares Geared Australian Equity Hedge Fund ETF and Vanguard Australian Shares Index ETF. On the economic calendar front next week, we may see investors react to Australia's consumer confidence data out on Wednesday, with a forecast of a decline in consumer confidence in December. Overseas, key economic data out in China will give the final insight into the state of the recovery of the world's second largest economy for 2024 out on Monday. China's industrial production data for November is out on Monday, with the forecast of a decline in production from 5.3% to 5% growth in the month of November. China's retail sales data is also out on Monday for November, with the expectation of another decline from 4.8% to 4.5%. In the US, the Fed's last interest rate decision for 2024 is handed down on Thursday, with a forecast of a cut to 4.5% from 4.75% as inflationary pressures continue to ease in the US. US retail sales data is also out earlier in the week, with the expectation of a slight uptick in retail spend in November and on the back of the Black Friday sales. And that's all for this Friday. Have a wonderful weekend, and as always, happy investing.